Hello, this is Ernest Burley Jr., your cool insurance agent, back at you again with some more great information on more than insurance. On previous podcasts, I talked about mainly insurance and also other topics like real estate and business ownership and things of that nature. But I'm expanding the podcast. I'm expanding it into financial services. So in addition to being a licensed insurance agent, I am also a certified financial planner professional. I'm a chartered financial consultant. I'm an NFLPA registered player financial advisor. I'm an investment advisor representative, which means I also have the Series 6, Series 63, and Series 7. So I manage millions of dollars for clients in various investment portfolios. Also, I'm an author of 2 books on money management. First book is Money Management Easy as 1, 2, 3. Okay. And the second book is Money Management from Grade School to Grad School. So go pick those up. I heard they're pretty good. And I've already explained that I'm a licensed insurance agent with over 30 years in the insurance industry and over 25 years in business as far as helping people out with insurance and financial planning and financial services, things of that nature. I have clients all across the country, so state lines don't restrict what my firm can offer to clients. My firm is Burley Insurance and Financial Services, so I have clients from the north to the south, from the east to the west, all over the country. So no state lines can stop us from helping clients throughout the country. I specialize mainly in wealth management, investing, so IRAs, portfolios, things of that nature. Also asset protection, so protecting what you have accumulated, financial planning, insurance, and also athlete management. And on the athlete management side, that's mainly as an NFLPA registered player financial advisor on the NFL side. On the NBA side, I'm an NBA agent, so I am a certified NBPA certified player agent. The purpose of this podcast is to educate you, to enlighten you, to empower you with clear, objective, unbiased information so you can make some great decisions for yourself and for your family, for your business, for your church, or whomever or whatever, okay? So that's what this is all about, just to get you some good information in hand so you can just know, okay, this is good, solid information. Let me implement that and work it to my advantage. Today's podcast is titled TLC from the IRS. And I know a lot of people are like, TLC and IRS, those terms don't belong in the same sentence, but they do. Now, this podcast is mainly geared towards my business owners out there, my entrepreneurs. Now, don't turn me off because you're not a business owner or entrepreneur now, or you don't plan to be, because there's some good information here for you too. Now, it's also for aspiring entrepreneurs. And I just want business owners and entrepreneurs to know that the IRS has a lot of tax breaks, a lot of great tax breaks for business owners. I have a lot of clients that are business owners and people who are referred to me that are business owners, but they're not always necessarily taking advantage of all the tax breaks that are afforded them. So I wanted to just jump in here and do this podcast real quick, because it amazes me at how a lot of people are leaving a lot of their money on the table, so to speak. So I can't go over all of the benefits from the IRS, but I'm going to go over a few different things. And we're going to talk about mainly tax deductions. So a lot of deductions you can make as a business owner. So you want to make sure you take advantage of that. And I listed them here. I had to break out my whiteboard. So I listed a few here, and I have a little cheat sheet here just in case I forget a couple. But here are some things that you can write off. I know it sounds common sense, but here we're going to go through them anyway. Okay. So computers, like your laptop that you use for your business, you can write that off in addition to office computers, right? If you can look back there, you see I have, well, I guess you can't see too well, but I have several workstations there and several office computers. So that's a business expense. Any legitimate business expense can be written off, which means you can reduce the taxable income by that expense that you've incurred as a business owner. So computers, payroll. And I don't know if I've talked about this before on a podcast. Maybe I need to do a separate podcast on this, but you should be an employee of your company. So speak with your accountant to find out which way you should incorporate. I highly recommend you incorporate. A lot of small businesses are S Corps because that's a very friendly corporation status for small businesses. It allows you to reap the benefits of a business owner, but those profits that flow from the business go down to your personal income tax return, and you do have to end up paying taxes on that. But I'm going to show you how you can reduce both of those, right? So here we go. Payroll. So if your business earns $100,000 per year, and you pay yourself as an employee of your company, an employee of your corporation, $50,000, that's a reduction to that $100,000 going towards payroll, paying yourself. Okay. Payroll expense. And by that, I mean, I would highly recommend, getting a payroll company to do that for you. So you get your quarterly statements, you get a nice clean W-2 statement. It's real easy. They only charge maybe 50, 60 bucks per payroll run, but they keep all the records for you and give you all your statements and things of that nature. So highly recommend doing that. So first of all, you want to make sure you incorporate, make yourself an employee of your corporation, pay yourself a salary, and have a payroll company do that. And that payroll expense is deductible. It's a legitimate office expense. Your payroll, which you pay yourself, is deductible from the income earned at the business level, okay? Because you're an employee of your business. Rent or mortgage. So if you're paying rent, boom, write that off, the whole thing, right? Now, if you're paying a mortgage, speak with your accountant on how they do the amortization and all that kind of stuff. Like I said, I'm not an accountant, so I don't get into that lane. But yeah, if you're paying a mortgage for your office space, yeah, write that off too. Utilities, so your water, your electric, your gas bill, that's something you write off. Your cell phone bill, use that for business, right? A vehicle, if you need a vehicle, yeah, buy it through the business, okay? So yeah, you want to take advantage of every tax deduction and decrease that amount of income that you've earned to the business as far as making it being taxable income. Furniture, so I have a ton of furniture in here also. You can write that off. Stationery, so your paper, your pens, your business cards, your business magnets, all that stuff, envelopes, write all that stuff off. Marketing, advertising, all expenses that are incurred as a result of that you're promoting your business, you can deduct that stuff. Insurance, of course, you want to insure your business. You want to make sure a lot of businesses out there, they don't have insurance. So you want to have business insurance because you don't want something to go wrong with your business. Your business happen to do something wrong, cause someone some physical harm or some financial harm. They're going to come after you. So you want to make sure you have an insurance policy in place to be able to take care of things that may happen and not end up getting in your pocket personally. Okay. CE. So it depends on what type of business you're in. CE stands for continuing education. So since I'm a certified financial planner, I'm also an investment advisor, representative, chartered financial consultant. I have all these different certifications and designations and licenses or whatever. I have to keep up with continuing education. So that's a cost to do that, right? There's a cost to do that. So I have a cost for those renewal fees for those different organizations and also the licenses that I have to continue to renew, like my insurance license. I have to have continuing education for that. For my Series 6, 63, and 7, I have to do continuing education stuff for that also, okay? Supplies, any office supplies like trash bags or whatever supplies you have for your office, any legitimate business expense. This adds up to a substantial amount of money, right? And that reduces your taxable income. That's what you want to do, reduce your taxable income. It's money that's being paid into the business and helping the business run, but reduce that taxable income that way, okay? That is a great way to do it. Now, also, I'd recommend setting up a retirement plan, and that's another way you can reduce the income that you pay yourself, the taxable income that you pay yourself. So say, for instance, if your income is bringing in, like let's just say $100,000 and you pay yourself $50,000. Say you set up a simple IRA. Now, the main retirement plans that are kind of geared towards small businesses are 401k plans, simple IRAs, and SEP IRAs. Don't have time to go over all those in details right now, but a lot of small business owners, when I kind of speak with them, the simple IRA kind of fits them best. But I have some that a SEP IRA or 401k fits them best because they're wanting to put away a lot more money. So say, for instance, you pay yourself $50,000. If you pay yourself the $50,000, that reduces your taxable income at the corporate level. Now, at the personal level, then you've paid yourself $50,000. But a good thing is you're paying your taxes throughout the year, just like you're being paid from a business. Some people have their main job. They said the main job that pays their bills, and then they have what they call their side hustle, the business on the side. And some people are doing that and just for now. And some people are going to do it as a side hustle indefinitely. Some people are going to transition from their pay the bill now job into that full-time job that is their passion or what have you. So you want to make sure you're paying taxes throughout the year. You'll be doing that by paying yourself a salary and paying taxes. And you can also pay estimated quarterly taxes to the state and to the federal government, to the IRS, to make sure you're not getting a big tax bite at the end of the year. So here's what you don't want to do. You don't want to collect $100,000 and you have not paid any taxes at all. You haven't paid yourself a salary, so you haven't paid any taxes that way, nor have you paid any estimated quarterly taxes. And then you're going to have a big tax bite at the end of the year. That's not going to be good. So let's not do that. Pay yourself a salary, pay estimated quarterly taxes if need be. In addition to that, speak with your accountant to see what's the best way to situate that for you. But if you pay yourself a salary and say you have a simple IRA, you can put $14,000 into the simple IRA, and that will reduce your taxable income that you paid yourself as an employee of your business by $14,000. So if you paid yourself $50,000, now you reduced it by $14,000, so your taxable income is $36,000. So you just have to take advantage of that stuff. Say if you just pay yourself, some people have a smaller side gig and they're maybe making just $20,000 or $30,000 a year. You can still put in that full 14. If you have your main job, you say, okay, that's my main job. And then I have this side hustle. I want to pay myself salary from that side hustle and then put all of that up to the limit of the simple IRA, $14,000 into that plan. Depending on the amount of income you're earning, a SEP IRA might be good for you too. But like I said, we don't have time to go into that now. Maybe I'll go into further details on that in a further podcast down the line. Okay, that's it. I just want to talk about this really quick because I come across a lot of people who have this side hustle, these side businesses, but they're not taking advantage of reducing their taxable income by taking all of these various expenses, incorporating and paying themselves a salary through the business so they can reduce that taxable income through the business, and then having a retirement plan. So at the personal level, they can contribute to that retirement plan through the business and reduce their personal taxable income. So let's please do this, please, please, please. All right, so our recap, that's it for today's podcast. So our recap is, hey, the IRS does have TLC for business owners. They do have some TLC, a lot of TLC for business owners. And the takeaways are, we just talked about that. You want to reduce your taxable income by as much as possible and as much as feasible by doing this, by reducing your taxable income by these various expenses, by paying yourself a salary, by setting up a retirement plan, ideally so you can reduce the income that you pay yourself by a certain amount and pay less in taxes that way and be saving for your retirement at the same time. So let's do that. Let's do that. Okay. I want to thank y'all for listening in. I thank you every week for listening in to the podcast. Ask that you share the podcast with others. Just share that link and just share it with others and ask them to do the same, and so on and so on and so on, so we can make these podcasts go viral and help as many people as possible. All of my podcasts are on YouTube, so go to my YouTube channel. It's just Ernest Burley Jr., just my name, and click on there. I have some podcasts. I have some 1-minute clips on there. Some various things on there that talk about a wide variety of things: insurance and life insurance, disability insurance, long-term care insurance, real estate, paying off a mortgage early or not, okay? Business owners, employees, how to be a good employee, how to interview. So there are a lot of different things on that on my YouTube channel. I hope that you go check it out. If you want to connect with me, that's easy to do. My email address is ernest@ernestburleyjr.com. It's just my full name my first name at my full name.com. So ernest@ernestburleyjr.com, ernest@ernestburleyjr.com, or you can call my firm. It's 301-262-2600. Very easy to contact me there also, 301-262-2600. Now, since I talked about money, financial planning, what have you, I do have to read off my disclosure. So here we go. Burley Insurance and Financial Services, Inc., that's the name of my firm. The address here is 13621 Annapolis Road in Bowie, Maryland, 20720 is the zip code. Securities and investment advisory services offered through Next Financial Group, Inc., member FINRA and SIPC. Burley Insurance and Financial Services, Inc. is not an affiliate of Next Financial Group, Inc. This material is not intended as an offer or solicitation for the purchase or sale of any security or other financial instrument. Past performance does not guarantee future performance. All the views expressed are those of Ernest Burley Jr., myself, and Burley Insurance and Financial Services, Inc., and not those of Next Financial Group, Inc. Next Financial Group, Inc. does not provide tax advice. Okay, so that's the disclosure since we talked about some financial stuff. And that's it. So I look forward to seeing y'all again. I don't know what the next podcast is going to be, but it's going to be something that I hope will help you out in the future. So until next time, this is Ernest Burley Jr., your cool insurance agent, your certified financial planner, your investment advisor representative, your NFL PA registered player financial advisor, and so much more signing off. Until next time, y'all take care and be safe out there.